Facebook. I will be right with you. It's going to take me 1 second here. And we should be live on Facebook. Hi everybody, I'm Sami Abusad, Director of Education at T3 Live. I know I'm coming on pretty late. Just got back home. Restaurant was pretty much empty. I don't know what's happening to the world, but sometimes it's a good thing. Hope you're doing well. I decided, felt like doing a video today rather than tomorrow morning. So I went ahead and did it. Let's see. Am I good? I think I'm good, right? Let's go ahead and get started. All right. So what we do with these videos, with this weekly video, is go over the market, go over some swing ideas, share with you my thoughts for the upcoming week, and I hope you find benefit in it. If you do, please be sure to hit the like button. That helps me out a lot. Would appreciate it. Another thing is, if you have any questions, concerns, thoughts, need help, reach out. info@t3live.com. info@t3live.com. Before we start, as always, is standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. So make sure you agree to that. And be sure to also please check out the links in the description below. I dropped a couple links for recent videos that I think are really, really important. Okay? And also a couple of links for how you can check out my services. If you want to trade with me for the next 30 days, it costs only $49. You can try out my strategic swing trader if you're a swing trader, or strategic day trader chatroom, trading room if you are a day trader. With that said, let's turn on the charts and get started. So first thing I like to do, as always, is go over the market. And I got the chart of the QQQ, which is the tracking ETF for the Nasdaq 100. I think everybody knows what this ETF is. And the SPY, obviously S&P 500. So I want to talk about the Qs and the SPY. First, the Qs on a macro level on the monthly chart is way stronger than the SPY, mainly for two reasons. Technology stocks like Apple, like Google, Amazon have stayed okay. They came in hard with the market, but nowhere near other companies. So they are holding up pretty well. So we got Qs and technology, SMH, okay on the monthly, still at the rising 20 at support, no problem. The SPY, which is dominated by banks got sold really hard. XLF is banks. That's XLF. It dipped way below 2018 lows. Remember, at the end of 2018, we had a crash. The XLF went all the way down to almost 2016 lows. So the SPY is showing a lot of relative weakness because it's dominated by, it's where all the banks are in the S&P 500, and it's also where the oil is, right? The Qs is immune from oil because oil stocks are listed on are part of the S&P 500. They're not part of the Nasdaq. So the Nasdaq is showing relative strength. Now, long-term picture, the Qs is much healthier than the SPY, but short-term picture, they're about identical. See this? I mean, the SPY is way weaker, as I said. Look at this. Way below that red line, which is the 200 MA. Qs, not that far below it, but similar picture, and the picture is a downtrend, an all-out downtrend. Here's a rule for you that you should always remember. If you have a fast, sharp sell-off like this one that breaks multiple support levels, okay, breaks the trend line and breaks two or more support levels, you can already assume that we are in an automatic downtrend and the next sell setup is actually playable short. Does that make sense? Downtrends are lower highs and lower lows. That's what the definition of a downtrend is. But you don't need it when you have a fast, sharp sell-off that breaks two or more support levels and breaks the trend line. Okay, so the market is totally in a downtrend now on the daily chart, and I'm not sure that we bottomed. Of course, Friday's bar was unbelievable. I got it. I saw that. I was trading it live. but I don't know that we're going to get follow through. We have a messy chart above, a lot of resistance above. And let's not forget, we are in a downtrend. So the default is to look for lower highs and lower lows, not to go back up necessarily. The high here was not easy to pick, was not for sure. I do feel this high is going to hold for a long time to come. But even for next week, I don't know that we're going to follow through to the upside. Some of you, myself included maybe, thought, okay, this had a real shot at moving up after that huge bar, big bottoming tail, right? We didn't have any follow through. So tomorrow, on Monday, we have to look for what kind of a bar we get. If we get a second green bar, that would be a really positive sign. If, however, we get a red bar or even an inside bar, which is what I'm expecting, I think there's a 90% chance that or 80% chance, I don't want to exaggerate, that we will get a red bar or a narrow range bar that stays within the range of this bar's of Friday's bar, within the range, doesn't go above it. And if that ends up happening, what I'm saying is the likelihood is very high that we get some kind of an inside bar. Then what becomes important is not Monday, but Tuesday. Do we get follow through to the upside, or do we get follow through to the downside? So it becomes Tuesday. Now on Tuesdays I do an aftermarket lesson, so I'd be happy to give you an update on Tuesday. But if we get follow through on Monday, then that would be bullish. We still have resistance above, so it's not going to be smooth sailing. But if we get follow through to Friday's bar, then that would be bullish. If we don't, and we get an inside bar, then Tuesday becomes important. Or if we get a big red bar, then that would be all out bearish. That's probably the least likely outcome, is to get a huge red bar that completely reverses Friday's. Okay, so that's my take about on the market for next week, for Monday. And the SPY, similar but weaker. IWM is just in a different world almost. Super weak. Look at the monthly chart. We're talking, it took out all of 2019, all of 2018, all of 2017, and right now is at the range of 2016, when Trump basically won elections here. Well, that's where the IWM is. The IWM leads the market, right? Leads the market. It was showing relative weakness on that last run-up and was the first to crash. It didn't even take out the highs from 2018. So IWM, I like to keep an eye on it, even though I don't really use it so much for day to day, but I like to keep an eye on it because it definitely leads the other indices. All right, with that said, let's take a look at some swing ideas for next week. If you're part of the Strategic Swing Trader, if you're already a subscriber, you can log on to your account. I got 2 long ideas posted for you. I'm going to be taking those, and 3 shorts for Monday. One of the longs is going to be, I'm going to play it with twice the risk, meaning I really like that play. So check it out. The list is already, the newsletter is already posted basically. Now you will get it in your email on Monday at 8 a.m. All right, but if you would like to log on to your T3 account, get the ideas now, put them in the system like I did, feel free. It's all, the plays are already posted. All right, here's some plays for you, some ideas. Of course, we know that oil collapsed. Some oil stocks look kind of interesting. We don't want to play oil stocks that are in an all-out downtrend on the hourly chart. Let me show you what I mean. Like maybe FTI comes to mind. When I have declining moving, actually FTI is not the worst. Is kind of okay. But if I have a declining 20 above, I do not want to play something long with a declining 20 on the hourly chart. I want to play something that's kind of has a flat, the 20 that has flattened out, like the OVV, right? Look at this. Something that has started to curl up. So we'll start with from top to bottom. NBR as flatten, the moving average on the hourly is starting to flatten out. I know it's a penny stock, but penny stocks can move a whole lot. I mean, did you see WLL on Friday? How much it moved? It was a penny stock. I think it almost doubled from the day before was a 69-cent stock. It went to 130. That doubled, almost doubled. Did you see? I don't know, like DO, what it did? So a lot of these little stocks, oh my God, they can move so much. So I like NBR as a breakout. I like NGL as a breakout. The chart is taking a while to update. Now NGL is still under the 20 on the hourly, but as a breakout, stop right here. Those are all both oil. This is oil too. It looks like every item on my list is oil here. Yes, NR, same concept on the hourly chart. On a daily, that's down so much already. OVV, over the base, stop under it. I like it. Look at the daily collapse from 18 bucks. Just a month ago was 16 and a half. Actually, a month ago was about 17 bucks. And now breakout, stop under the base. Like it. Oxy is pretty good. I like it a lot. Look at the larger time frame. Down from 100 bucks, 90 bucks to 14. Looks really good. But the problem with Oxy is the size of this bar is huge. So it'd be a really big stop. Over here, stop right here. Okay, target 1 and target 2 would be the gap fill on Oxy. Not bad, but again, just a big bar on Friday. And then FTI, I don't like. I was just talking about that. Okay, so those are the longs. Actually, I just realized every one of them is oil. Every single one of them. Now, remember, some of the plays don't trigger. If they don't trigger, then no harm, no foul. If they trigger, the ones that I posted, I'll be in. All right, shorts. ABMD has a 1, 2, 3. So, or an hourly breakdown. 1, 2, 3 on the daily, hourly breakdown. Short, stop. Okay, like it. The weekly is good, all out downtrend. Monthly is still good, has room to go to 100 bucks at least, maybe even to the 200 MA on ABMD. Now AQM looks like it's going to go to 0. I know it's a 50-cent stock. Trust me, I know, but it still looks lower. I've shorted 4-cent stocks. They went to 0. 18-cent stock went 7 cents last week, but I didn't get it because it was hard to borrow at TradeStation, which killed me. ACB, I called it short under the base. Was a dollar stock, right? $1.30. $1.30 was the entry. Where did it go to? It trailed on Friday. It went to 63 cents. That's a 50% gain or loss in the stock's price. So AQM is a penny stock, but I still like it lower. It looks lower on every time frame. Look at the weekly right off the declining 20, meaning it's not extended. It can still go 50 more cents. The BIG has a 1, 2, 3, so it would be under the low. Oops, what happened there? BIG would be under this bar's low, under 12.30, stop over 14.20. Almost a $2 stop. CDMO is a beauty. There's a gap down and then a couple of doji bars, tight base, short under the base, stop above it. But there's only one problem with it, which is the support on the monthly chart. It's already at some support. So that's the only problem with it. Otherwise, it's a beauty on the daily chart. GPro looks like it's going to 0, unfortunately, but it does look like it's going to 0. It's just down, down, down. Look at this chart. Tell me this is not going to probably 0. I mean, just look at this chart. Look at the monthly. It's amazing. Breaking down on the monthly, and we got a 1, 2, 3-ish. Now, it's not a real 1, 2, 3 pattern. A 1, 2, 3 pattern is when you have an igniting bar, a wide range bar, followed by a doji bar. And then, and then you get the continuation bar. That's 1, 2, 3. Remember that FTI we talked about a minute ago? If you want to see how it actually, this whole move started, it was a 1, 2, 3. Here, see it? It gapped down and then had a sell setup on the weekly chart. That's where it was at the beginning of the year. A weekly sell setup, 1, 2, 3, and then from there, look out below. It went from 20 to 7 bucks, right? 620. So GPro is similar. I mean, it's not similar, but I'm considering this to be a 1, 2, 3, even though it technically doesn't meet the definition of a 1, 2, 3. Believe it or not, there are a couple of oil stocks that look lower still. Look at the NS on the hourly chart. Tell me this doesn't look lower under the base. It looks good. I'm willing to short it. You'd have to put the stop up here. So it's not a tight stop. The market is moving massively right now. Everything, there's no such thing as a tight stop. Every stock is moving so much on a daily basis that the bars are just huge. PHIO, a $2 stock, but gap down under the base. Another stock that I think is going to zero. I like it, a little thin, like it under $2, stop above the base on the hourly chart, or just above, I'll tell you where the stop goes, above 241 with an entry under $2. And then RES is like the NS, but even better. It has a base breakdown. On the hourly chart, it's oil. So some of these oil stocks for sure are going to go to zero, for sure. So I like, so far at least, based on what I saw this weekend, the NS and the RES short. And then a bunch of these oil stocks, all of them, I like long, with the exception of the FTI. All right? That's my list, short and sweet. But I am taking 5 plays out of this list. So it's not a bad list at all. And again, continue to monitor the market. Told you what my bias is. I'm going to wait for Monday's bar to see if we get follow through or no follow through. If we get follow through, that's pretty bullish. If we don't, then the question becomes, is it an inside bar? If so, then look for follow through to either the downside, in which case be bearish, or if it takes out the inside bar's high, then be bullish on Tuesday. Or if we get a massive red bar, then that just shows you how weak the market is. That it put in the biggest bar I've ever seen. Look at this, from 178 to 194, and it closed at the highs. That's almost a $20 bar. That's a $16 bar. Probably the biggest I've ever seen, honestly. And if it doesn't produce follow through on to that bar, then that only goes to show you how weak the market is. I used to think that wide range bars were the be all end all, that they were the footprints of money, and they are big money. But if they don't produce follow through, what matters is not the wide range bar. What matters is whether the stock produces follow through or doesn't produce follow through. If a really, really bullish bar that required hundreds of millions, billions of dollars probably to produce, for money to come into it, does not follow through, that only goes to show us how weak the market really is. We saw the Fed inject $250 billion the other day into the market. The market went crazy for like 20 minutes. Hold on, let me show you. And then it got sold. Again, that only showed this was it. Injected like, I think, $250 billion worth of capital. Market went nuts, loved it, and then failed, and then went down and closed at the lows. Again, that only shows how weak the market is. And from there we crashed. We went up. Oh no, from there actually that was yesterday. We gapped up, we came in, and then of course at the end of the day, the president announced national emergency or whatever. The market bounced really hard. At any rate, I hope you enjoyed this video. We are doing extremely, extremely well right now. I hope you're doing well, staying safe, but I'm doing extremely well. Students in the room and in the newsletter are doing extremely well, because I like bearish markets. I like bearish markets and can't lie. So if you would like to be part of a room or a service that actually prospers, thrives in bearish markets, then I invite you, I encourage you to join and check out the links in the description below. It only costs $49 for the first 30 days. So you can try it out, see if it's for you or not. Okay? With almost no money up front, pretty much. And then after that, month to month. So you can cancel anytime. But with that said, I want to say have a wonderful rest of the weekend. I'm Sami Abu Saad, Director of Education at T3 Live. I wish you all the best and be safe out there. Take care, everybody. Have a good night.